I've helped hundreds of traders beat the odds and become successful. Most of them were in the exact same position that you are right now. Or at least Ethan was. Back in October of 2023, he was still losing prop firm challenges and losing money to the markets. But now, fast forward just a couple of months, and not only has he made back all of the money that he lost from trading, but he has now scaled to making over $10,000 per month. In this video, we're going to break down step by step how he did it and how you can do it too. And
Mhm.
not only did you have a 5-figure month, you did something that I think is the pinnacle of any trader's dream, or it should be their dream when you're not profitable. Like a trader who's not profitable, crossing that line where you pay off all your trading expenses, right? Because a lot of people
Yep.
misunderstand being a
Mhm.
profitable trader. They'll be
Yeah.
profitable for a month and then they're down, 20K from the last couple of
Yeah.
years, and oh, I'm profitable. It's like, yeah,
Mhm.
not yet. So
Yeah.
you actually went and erased all of the losses that you had taken from trading. And
Mhm.
now, not only that, now you just made it your first over $10,000 month, which is
Yeah.
nothing less than insane, man. So hats off
Thank
to
you.
you,
Thank
man.
you.
Hats off to
Thank
you.
you. I
Yeah,
mean,
man.
kudos to you, man. Like,
Yeah,
credit
no,
goes to you
I
for sure.
appreciate it. Hey, we're a team, baby. We're a team. Ethan ICT, welcome, brother.
Yo, what's up, Jesse? What's up, Jesse? Glad to be here. How are you?
Good, man. Good. I just want to say I'm proud of you. First off, man. I think everybody that has had the pleasure to work with you, or just seen they come up, is always going to say the same because it's
Mhm.
awesome just seeing somebody else win, especially somebody who really reminds me so much of myself whenever I was at that part of my journey. So it's
Yeah.
a pleasure, man. I just want to say thank
Yeah,
you
it's
for
super
giving it
fun.
your all and always just going hard, man. I love to see it.
Thank you. Thank you.
Hell yeah,
Yeah.
man. Hell yeah. Cool. So, some of the people watching this may know you from community or from seeing you on YouTube or seeing all the awesome
Mhm.
stuff that you post. But for those that don't, give a little bit of a backstory. Like where were you, last fall, like last October? And I guess we'll just start there.
So, starting back in October, I think this is about a year a year and 3 months probably into my trading journey. And so at this point in my journey, I've gone through a bunch of courses and I have a very like I guess perfectionist mindset if that makes sense. And so I try to learn everything possible. But I guess during October, that's when I really found SDBP. And I was following you for a while there. I was following you for around a year at that point, and I was watching your live streams on Twitch, right? Your Wednesday live streams. And just seeing you so consistently calling price on no matter what market you were looking at, that was what was super intriguing to me. And you did it in such a simple manner as well. It's like a lot of things that I resonated with also came back to your YouTube channel, which is pretty much displacement theory on your YouTube channel.
Yeah, bro. I mean, displacement was one of those things. And I think that there's a lot of traders in the community, whether it's ICT or whatever, school of thought. There's always just that one thing that was like the light bulb, so to speak. That clicked. And then a lot of other ideas form off of that idea. So, like, displacement for me was really just helping me stop taking low quality trades. Essentially, that's really what it does. And also, it's kind of like a clear way to determine, am I confident in the setup or not? Is my edge here or not? And it's one of
Mhm,
those things that you can use to just draw a line on the sand. And it really just worked for me. And it definitely has worked for a lot of people. And at the end of the day, it's really what ICT is all about, right?
mhm.
But so, I know you said you went through some other courses and you'd been in your trading journey for a little over a year. What would you say is the biggest struggle that you faced before you became successful? Like, what was the struggles that you were facing back last October and really just before this awesome journey started?
So the biggest struggle and the biggest difference between a course and a mentorship, right? So I think this is where a lot of people think, like right now, for example, on Twitter, you'll see a lot of leaked courses, right? A lot of free education online. But where the difference really is having a mentor versus just a course to go through, right? And so I feel like in that aspect, if you have a mentor to guide you through step by step like on a daily basis, step by step process, then that's what really changed it for me is because I learned like pretty much 1,000 different concepts. I understood them. I just didn't know how to apply them correctly. It's like I study order blocks or propulsion blocks, vacuum blocks, whatever you want to call it. But at the end of the day, it's not useful to me if I don't know how to apply it. And so that's where the mentorship really changed it for me is having a daily thought process, top down analysis, to execution When we first started SDBP, I saw a lot of executions. Even on your free live streams, you had executions, and that was where it really changed the game for me. Is that watching your thought process, what you're paying attention to on the lower time frame, because you have a game plan on the higher time frame. When you drop down to your lower time frame, you just follow your higher time frame game plan and execute accordingly. And that's what really amazed me about your trading essentially. And so I took the leap of faith there essentially.
Oh yeah, man. I think that's kind of the common struggle, and not just ICT, but any trading is. It's always I always make the joke like it's always fun when you're watching the video on YouTube or
Yeah.
wherever the course wherever, and you're like, oh, this is it, this is it, and
Mhm.
then it's
Yeah.
like 9:30 a.m. and you're just like, okay, like there's so much nuance to trading, and that's why you have to see it done. You have to see it done live. You have to see it in different scenarios, right? Because oh yeah, here's this perfect entry model. If it was just that easy, then everybody would,
Exactly.
just be gazillionaires here. We'd all just be in
Mhm.
Dubai with our Bugattis. No, but
Yeah,
you know,
exactly.
so yeah. So what would you say? What did you really try to do, if anything, to solve that? Because I think a lot of people listening to this are in that same exact position where they have all of this information because we're in the age of information. There's so much stuff on
Mhm. Yeah.
YouTube. These people, like you said, they're leaking courses now. There's all
Mhm.
this
Yeah.
stuff, but like if that's the case, and there's so many people still failing in trading, there has to be a common reason. So I'm just curious of like what that was for you. Like, what did you try to do to compartmentalize and put everything together?
Yeah, so I think that all dumbs down to simplicity. And like you always say, as my mentor, I like really listened to this and this really resonated with me is that you said simplicity scales, complexity fails. And that's what really hit me. I was like, damn, you're right. It's like all I need to gauge my trades now, like from when I first started, I'd be looking at healing ranges, OTE, trying to look for order blocks, fair value gaps, all of those different things. But now all I use is high, lows, and fair value gaps. And it's really that simple. It's just if you dumb down your thought process, it becomes that much easier. Just because before I had to look at a million different things when I doing my chart markup and stuff like that, that it confused me because you'll often see if you want to see something, you will see something. And so when I tried to build a narrative of some sort on a higher time frame, I would look at all these different things that are bullish, but there's all these other things that are bearish. So I don't even know which way the market is trying to go essentially on the higher time frame. So I would usually just refer back to the lower time frame and get lost there as well. So by just simplifying things, not even just technical analysis, even psychology wise, it's just simplifying things is so important. And another thing that you taught me that was really, really extremely effective that really relates back to simplicity scales is that I used to have this massive organization.
The notion, the
Yeah, the
notion.
notion. I used to have this massive like organization like system, but like what really drove me forward was quite literally I bought it's actually right here. Let me show you guys. It's this notepad right here. It's that easy. Just this notepad, I write down what I need to do on the daily. I complete all the tasks on there, or I try to complete all the tasks. I just write down what I need to complete for a day. That's it. It's
Yeah.
so simple, and it makes me so much more productive because I'm not spending 3 hours trying to go through my organization system anymore. If that makes sense.
Yeah,
So
man,
yeah.
and that's just so powerful because like it's really popular now like to have this crazy morning routine, and I think a lot of people think that I'm like that. I think because I used to do like cold plunges, they think I have this like I'm like running 10 miles and it's like no, you don't want to do that. You want to have a morning routine no longer than an hour. You want to spend as little time possible, or like people will spend more time trying to be productive than actually just
Exactly.
working and just being productive. And it's pretty common. So and I think that the way that you do anything is the way you do everything. So that's
Mhm,
why whenever I worked with you and everybody else, I just try to like not only be so linear and be like, hey, here's analysis, here's trading psychology, understand the
mhm.
basics, and then here you go, you're going to be successful, because that's not the case. Most of the
Exactly.
time the reason people aren't successful in trading is far deeper rooted than not understanding analysis. It's deeper rooted, but it's usually really simple and easy fixes, just like changing your day to day, changing the way you think, right?
Yeah.
Because I think that people misunderstand whenever all the trading psychology talk, because trading psychology, you know, I think a lot of people mistake it for something that's going to just replace their entire trading plan.
Mhm.
But whenever Mark Douglas, shout out and RIP to Mark Douglas, said the difference between successful traders and unsuccessful traders is the way they think. It's not
Mhm,
just the way they think about trading, it's just the way that they are wired. So
mhm,
becoming a successful trader, and anybody who has went from, struggling like me or you to where, what we're doing now, anybody can agree that you had to go through a little bit of a reinventing of yourself. So I love
mhm.
that, man. Now,
Yeah, for sure.
I know you said that you found me on. Did you find me on Twitch or was it on YouTube?
It was on YouTube.
YouTube
Yeah.
and then migrated over to Twitch. Those streams were cool. I remember it
Yeah,
was
those
it
were
was
good. Yeah. Really
it,
good times.
yeah, yeah. It definitely made me even better because trading live in front of that many people, I'll just be honest, it's not the
Yeah.
most fun. I know you've
Mhm.
been trading live in front of people
Yeah.
now, which is awesome. And I think that anybody has the balls to go and do that, whether or not you're even, I mean, hopefully people don't go do it and they just are terrible. But if you're not even the best, right? Just
Mhm,
to have the courage to do that says a lot, right? And it
mhm,
makes you a better trader. It makes you want to talk about accountability.
mhm. Yeah,
Accountability of 500 people in a chat saying,
yeah.
either really nice or really not nice things.
Yeah.
Those are that's the biggest form of accountability there is,
Mhm,
and it builds a lot of character as a trader too. So I love
mhm.
that. So you found me through Twitch. Now, what would
Through
you say
YouTube,
was?
through
I
YouTube.
mean, I'm sorry, through YouTube, and then you
Yeah.
hung out on Twitch.
Mhm.
What would you say was the reason where you're just like, okay, like I'm gonna actually just join this mentorship instead of watching like YouTube or instead of
Mhm.
watching Twitch or any of those things.
Once again, it just comes down to I think it was just so thought process driven because I don't care what anyone says. It's very, very, very difficult to make a mechanical strategy, a fully mechanical strategy. Otherwise, everyone would be rich, right? Like you say, everyone just use a trading algo, they'll be rich. And so that's where the mentorship really comes in, is because of that thought process, that subjectivity, you can transfer your experience, and that's just mentor to mentee, right? Transferring your experience, your thought process using the same concepts. So now we're not only incorporating technical analysis, but we're also incorporating psychological aspects into this trading, right? So that's what really helped me there is just um having a mentor side by side with me is always really good and beneficial because if they are consistently profitable, they know what they're doing, they won't just be pushing buttons left and right. They'll tell you, be like, I can see this happening. I can see this happening. It's not very obvious right now. I'm not going to press a button. But when it's really obvious, they're like, okay, I'm going to expect this level taken, expect this confirmation, and all of that stuff. And then they'll push a button in front of you, right? So it's just having that control. And a big thing for me was also over trading. And what I did to combat that was one, it was journaling for sure because I didn't want to journal 10 times per
Yeah,
session.
yeah, accountability is real with that.
But second is also having a mentor, right? Like if my mentor's not pushing a button, why would I want to push a button, right? They're the more experienced one here. I'm learning from them. So maybe in the future, when I become my own self-sufficient trader, I can develop and refine my own model. But for the time being that I'm learning, I would rather learn and follow the thought process of someone that's already consistent, if that makes sense.
Yeah, no,
Yeah.
100%, man. No, it definitely makes sense and well put. At the end
Mhm.
of the day, that's going to be the biggest separating factor between a trader who knows everything they need in order to be successful and a trader who actually is successful is going to be
Mhm.
understanding when to not act and understand that
Exactly.
non-action is an action. And that's another cool, I don't want to get go on too big of a side quest here, but it's another cool thing that trading teaches you about life, because there's so many life lessons in trading, right? And one of
Mhm.
them is that non-action is an action. And whether it's in business, whether it's in relationships, whether it's in life, you can take that concept and apply it so many other times and realize like there's not always the right thing to do. And sometimes the best thing to do is just wait and sit on your hands, right? Whether it's trading
Mhm.
or outside of that. So
Mhm.
yeah. Now getting to where you're at now, man. Like recently, you've had some pretty awesome achievements. You've even been helping people on your own, and you help out a ton of members in the community. So, what
Mhm.
was your big payoff like since you joined the members or the mentorship? Like what really was like, wow, like this is real, right? Like this is actually starting to you know what I mean? Like cuz a lot of traders are at
Yeah.
that point where they're just like, am I ever going to make it out? So, I
Mhm.
think it would be super inspiring for a lot of people to hear what you've accomplished in such a short amount of time.
Okay, so I think my number one advice is if you're feeling that trading is like, oh, it's not working now and stuff like that, trading, I agree, it's a lonely journey. So number one is find yourself a community, right? And so my journey, it felt extremely lonely because I was just by myself, looking at charts every day, wake up, do the same thing, routine, right? And so it became such a lonely journey. And once I joined some sort of community, and this is where it really separates, I feel like SDBP separates from other communities, is that it's it honestly, I know this sounds kind of cheesy, but it's like it's family, not
Yeah.
just another community, right? And so number one is having community around you is extremely important because when other people succeed, that motivated me to succeed more. Um, and so the biggest payoff for me is that realizing that trading is not only do you make money through trading, like you make money through trading for sure, but you can make through other means. Like if you learn the skill of trading, you can people will pay you for your analysis, people will pay you for your education, for example. And then most of all, your trading makes the most profits, right? So just very important things. And yeah, I went from like 3-digit months to 5-figure month, and that was the most surreal thing for me. Is just I was doing my it was so like casual too. It's like the March 2024. I was just doing my finances at the end of the month, like every other month, and I was like, wait, did I make over 5 figures? I was like, yo, this is surreal.
Yeah,
Yeah,
man. Dude,
it
that's
also
fucking
helped me.
awesome, man.
Yeah, yeah,
I
it
love
also
that.
helped
Like
me
that.
realize. Oh,
Sorry,
sorry.
sorry. I'm getting excited, bro. It gets me more excited to hear stuff like that than even, like making money's fun, but like seeing somebody go, like your journey's just been awesome, dude. It's been nothing less than amazing to be a part of, and I'm just really grateful to be able to work with people like you, so I can, when I go to sleep at night, I know that I'm involved in that. Like you took, I give you all the credit. You know what I mean? Like I didn't do
Mhm.
anything. You had to
No,
do it
you
all on
definitely
your own, but I didn't though. I mean, I did. I guided you. I gave you the path, I guess. But you put in the work and really did it, man.
Mhm.
So
Yeah.
hats off to you, man. And
Mhm.
not only did you have a 5-figure month, you did something that I think is the pinnacle of any trader's dream, or it should be their dream when you're not profitable. Like a trader who's not profitable, crossing that line where you pay off all your trading expenses, right? Because a lot of people
Yep.
misunderstand being a
Mhm.
profitable trader. They'll be
Yep.
profitable for a month and then they're down, 20K from the last couple of
Yep.
years and I'm profitable. It's like, yeah,
Mhm.
not yet. But so
Yeah.
you actually went and erased all of the losses that you had taken from trading. And
Mhm.
now, not only that, now you just made it your first over $10,000 month, which is
Yeah.
nothing less than insane, man. So hats off to
Thank you,
you,
thank
man.
you.
Hats off to
Thank
you.
you. I
Yeah,
mean,
man.
kudos to you, man. Like,
Yeah,
credit
no.
goes to you
I
for sure.
appreciate it. Hey, we're a team, baby. We're a team. So what would you say to anybody who is, in the same state where you were at? You have all these different concepts, you can't put them together. You might be making a little bit of money, but you're still in the hole. Where is the light, the light at the end of the tunnel? And what would you say to somebody who is, considering joining the mentorship, the Smart Trading Blueprint?
Do it. I'd say just join.
Simple and easy.
Yes, very
Simplicity scales.
simple. Do it, join. It's just I don't know. I think that the resources in there are just too great, and you're hosting calls very often. We have Jared Tendler in there for psychology. We have another guy named Hunter, another educator, and he teaches options really well. Um, if I remember correct, Dodgy DD also teaches in there sometimes.
Yeah.
So we have so many collaborations in there, and majorly, it's just everything is simple, like
Yeah.
point blank. Period. It's simple, and
And the
that's
live
why I
trading,
think
I think, is the
mentors.
biggest thing,
Yeah,
man. I think like
yeah.
really for a lot of people, like they just need to see it done. Like they just need to see it
Mhm.
in action, like while it's unfolding. And I think that's one of the biggest things,
Yeah,
you know?
yeah, for sure. Like the live trading every single day, pretty much, is like that is very eye opening for people that are struggling for sure. There's a reason why SDBP has such a high success rate, right? Results speak for themselves essentially. And so that's why I'm telling you, like, if you're on the fence of joining Smart Trading Blueprint, definitely take the leap because I'm telling you, it's like pretty much guaranteed. If you put in the work, you're guaranteed to get funded essentially.
I love
Is
it,
what I
man. I
yeah.
love it. For anybody that is interested, there's a link down in the description where you can apply and become a part of the Smart Trading Blueprint. So, Ethan, dude, awesome. I love it. Now, let's go ahead and get over to your actual strategy to go over, what
Yep.
you're doing on the charts day to day, and let everybody get to know you on the charts a little bit more because now they've heard your story. I think it would be awesome for them to see the exact strategy that you're using to, make these great achievements possible. So, let's go ahead and get into that.
All right, perfect. Let's get into that.
All right, so now we're going to be covering my
strategy a little bit, and you may have noticed that the background, my clothing has changed because it is a different day. I ended up moving houses in between the interview and now. So yeah, that's why the background looks a little different for this specific short lecture. And so right in front of me, what I have here is the components of my model essentially. And so I'm going to try to break this down as quickly and simply as possible for you guys. That way I don't bore you guys. And if you guys find more interest, then you can just hop over to my YouTube channel, and there will be everything here. Like all the components here are covered on my channel as well. So yeah, let's get right into it. So without further ado, here is a quick breakdown of the components of my strategy. And so the components of my model stems from both time and price, right? So for time, I look at quarterly theory by day, and I use this to identify the power of three and time-based liquidity. As studying ICT, I learned that market maker models stem from time-based liquidity. And so that's exactly what I use quarterly theory for, is to position myself within the wick of the either weekly candle or daily candle. And then I also look for time-based liquidity. Are we taking time-based liquidity? Are we displacing through it? Are we manipulating from it? And with that in mind, I'll be looking for market maker models. And so for price, I look at three subcomponents that stem from time frame alignment, which is kind of a subcomponent of time as well. So I'm just going to say time, price, time frame alignment. And so the end product of time frame alignment, what I found was that I need higher time frame, middle term time frame, which is intermediate term time frame I'll be referring to it as, and then a lower time frame. So the higher time frame, I use it as direction and bias essentially. So let's say I'm intraday trading, then I need daily bias. So my higher time frame would be the daily chart. My middle time frame would be the 1 hour chart, and then my lower time frame would be 5-minute chart. If you want to use the weekly chart, that's fine too. Weekly, 4 hour, and then you have your 15-minute. And so what I like to do is I build higher time frame narrative. In this lecture specifically, I'm going to be going over internal and external range liquidity, which is essentially price going from inefficiency to liquidity on the higher time frame to frame my bias. And then I would drop down to the intermediate term time frame, look for a market maker model. And then after that, I would drop down to the lower time frame for some sort of confirmation. And typically I like to look for a SMT divergence on either the intermediate term time frame or the lower time frame. And so those are kind of the sweet spots I like to use SMT divergence from. And then I'll cover more in depth as we get into it. So going to the next slide. So let's get started on the model right away. The first step I like to take every single day is to develop some sort of higher time frame narrative. So in this case, I will just be focusing on the concept from the market maker model trader, which the MMXM trader, he is a mentor of mine as well. And so his concept, internal range and external range, right? Just as ICT says, price only does one of two things. It's either reaching for inefficiency in the market or it's reaching for a liquidity pool in the market. So on our higher time frame, we pay attention to the current dealing range and see whether we are trading from a fair value gap or from a previous level of liquidity. If price is currently trading into a fair value gap, then we look for some sort of external range liquidity. And vice versa, if price is trading into some sort of external liquidity on the higher time frame, then when I'm going to be looking for price to trade back into some sort of inefficiency. It doesn't necessarily have to be a fair value gap. I just like using fair value gaps more, but you can look for any type of inefficiency. So recently I've actually been doing a little more studying on new week opening gaps, new day opening gaps, new month opening gaps, stuff like that. Those are very good draws on liquidity. And something you'll find is that price tends to book from new week opening gap to new week opening gap. So that's something you can incorporate into the strategy as well if you want. But the kind of inefficiency I'm really talking about are fair value gaps, balanced price ranges. It could be liquidity voids, volume balances, etc. Right? So any sort of inefficiency that you can find in the market, that's what I refer to usually as my higher time frame PD array. And so going to the next slide, here is a quick little diagram of what we want to see when anticipating that price will reach for a external liquidity. And so here we have price trading into a fair value gap, right? And so from here, I have both charts here, bullish and bias. And then I have a bearish bias here as well. So in this case, I'm just going to be using the left side chart. So as we're trading lower into this fair value gap, I'm looking for price to create a market maker model up into this old liquidity high. Vice versa, as we trade into this fair value gap, I'm looking for a market maker sell model into this old liquidity low. So that's pretty much my higher time frame narrative and framework. It's very simple, very quick and simple. So here is the next one where price has traded into an old high or low, and then I'm looking for price to trade back into an inefficiency. In this case, it would be this fair value gap. So once you trade above this high, I would be looking for a market maker sell model back into this fair value gap. And then here, once we trade into this low, I'm looking for a market maker buy model back into this fair value gap essentially. And that's just the higher time frame framework. Is it very straightforward, very simple. And so here, the second step is to identify the intermediate term time frame market maker model in context of the higher time frame. So if we just took liquidity on a higher time frame, right? For example, this red line right here, higher time frame level like PD array or liquidity. So if we just took liquidity on a higher time frame, I'm looking for a smart money reversal on the intermediate term time frame to frame a market maker model into the original consolidation or higher time frame internal range liquidity, or in this case, that fair value gap. So let's say this red line over here is that liquidity level. We're creating a market maker model, right? So I'm either targeting this original consolidation right here, or I'm going to be targeting the higher time frame inefficiency, which would be the higher time frame fair value gap essentially. And vice versa, if we're trading into a higher time frame fair value gap or inefficiency, then I'd be looking for liquidity. So once again, you have two targeting options. You can target either the original consolidation, or you can target the higher time frame external range liquidity. One more thing I wanted to mention before moving on as well is that at each of these phases of the market maker model, you can look for SMT divergence. So if you know what SMT divergence is, then feel free to use it. I have a full lecture on my YouTube if you want to take a look. So I mainly trade index futures. So when I'm looking for SMT divergence, I'm looking between NQ, ES, and YM. And so at each of these phases of the market maker model, not only do you look for SMT at the smart money reversal down here, but you can also look at it from the distribution high. So right here, right here, the distribution high, you can look for SMT divergence. And then right here at the accumulation low, you can look for SMT divergence. And essentially what that SMT does for me is it confirms that institutional manipulation has already occurred in the market. And so it tells me that, for example, on these highs, if you get SMT divergence, it tells me that the distribution phase has completed, it's ready to expand. And vice versa on the accumulation phase low, right? If we get SMT divergence on the lows here, then it tells me that the market has completed its accumulation phase and it's ready to expand. And so that's really where I'm looking to position myself. And so let's move on to step number 3 now. And so from here, step number 3 is lower time frame confirmation. And so in this step, we will be blending time with price. And so this is where we're going to be incorporating quarterly theory and splitting the day into 4 quarters, essentially. So the Asia session, the London session, the New York AM session, and then the New York PM session. Just so that it makes it easy for you guys, what you would be doing is you'd be annotating the following onto your chart. So you would want to put a vertical line at 6 p.m. EST. This is all going to be New York time. So 6 p.m., midnight, 6 a.m., and also 12 p.m. So put your vertical lines there, and then I just create quarters of the day. So you can look at the high and low of each quarter as time-based liquidity because it's the high and low of each session, right? If you want to refer to larger scale time-based liquidity, that would be your previous day high, previous day low, or you can even refer to your previous week high, previous week low, previous month high, previous month low, etc., etc. And the difference of these larger scale time-based liquidities or even smaller scale time-based liquidities is essentially how big of a market or how long-term the market maker model for your framing is. So if you're using, let's say, for example, previous week high, previous week low, you're framing a intra-week market maker model essentially. So just something for reference. If you want more information on that I have lectures on that on my YouTube. So feel free to check that out if you'd like. And so after you have annotated the vertical lines, you'd also want to plot the midnight opening price with a horizontal line and just draw it across your screen. And essentially how I like to use the midnight opening price is I use it as an equilibrium. If price is above, then I'm looking at it as price is in premium. If price is below, then I'm looking at price is in discount. And so this is just a very quick, easy way to filter your trades as well. Is what you can do is you can look at your midnight open and see where the manipulation occurred. So if you're bullish, then manipulation should occur below the true open, right? And then if you're bearish, then the manipulation should occur above the true open, just for example. So the setup we are looking for is to capitalize on a phase of the intermediate term time frame market maker model, which will be a sweep of time-based liquidity on a lower time frame. So that would be our lower time frame confirmation essentially. And so when that occurs, that will be the silver bullet setup, which is ICT's favorite setup essentially, and which is why we also find extreme expansion from that manipulation, because we're looking for that silver bullet setup, right? And so in terms of the intermediate term time frame, it will look like the silver bullet. But on the lower time frame, when we're looking for confirmation, all it really is just going to be the ICT 2022 model. And so you're just going to see accumulation, manipulation, and distribution. So let's go to the next slide. So here's a diagram of the setup. And for this model, there will be two possible setups. And so the setups are the same, but dependent on which session provides a consolidation. So in this first setup, Asian session consolidates and creates liquidity. And so we can then look at the high and low of the Asian session as time-based liquidity and wait for a raid. So right here, we see Asian session, right? The quarters of the day, Asia, London, New York AM, New York PM. And so looking the high and low, that's our time-based liquidity. That's what we're looking for essentially. So understanding the daily power of three, that would mean Asian session is accumulation, and then London session is manipulation, and New York AM session is most likely to be distribution, which is why we want to trade New York AM session most likely, as that will be the expansive move of the day essentially. And so if Asian session provides a consolidation, then I am generally looking for a continuation during New York AM session, right? So this here's accumulation, London session, manipulation, AM session, distribution, and then New York PM session. You can kind of disregard that if you want. If you know how to trade the New York PM session, then go for it. And so generally, if you have Asian session consolidation, then you're looking for New York PM session to either provide a continuation or a reversal. And how I like to gauge whether there is a reversal or not is if the final target or drawn liquidity has been met already. So once it has been met, what I'll look for is an SMT on the highs, and then that'll frame my reversal in the quarter essentially. So this is the same thing, but just inverted to show what it would look like in a bearish scenario. And so just for like a frame of reference on the left here, that would be that intermediate term time frame market maker model. This distribution phase is what we're looking to trade once we have that accumulation right here, right? Accumulation, manipulation higher during London, and then displacement lower. That's what we want to be a part of, right? We want to be a part of this large down move essentially into this original consolidation or whatever your higher time frame draw on liquidity is. The second setup is the exact same thing, but this time London session is the one that offers an accumulation or some sort of consolidation essentially. So when this occurs, we can look for opportunities during the New York AM and PM session. So during New York AM session, I'm looking for a turtle soup setup, or basically just a rate on liquidity. And I'm looking for that market structure shift. So once again, right, if London session consolidates, then I'm looking for accumulation, manipulation during New York AM session, and then New York PM session, I'm looking for that distribution essentially. And so exact same thing, right? On the left of the chart or diagram here, you'll see the intermediate term time frame market maker model, that accumulation phase, because we're in a bullish setup here, that accumulation phase is what I'm looking to trade into the higher time frame draw liquidity or the intermediate term time frame original consolidation. And so once again, this is setup number 2, but just inverted to show what a bearish scenario would look like. All right, so now it's time for the example, and I am running out of time here, so I'm just going to show you guys a live example that I took today. So here, essentially, what I was focusing on is this daily SMT divergence on the highs. So the number one thing that I want to do is build a higher time frame narrative, right? So right here, we have SMT on this high, right? So you can see how ES takes this high, but NQ fails to take that high, so that is SMT divergence, I look at it as institutional manipulation in the market. And so from there on, you can expect this high, if this SMT is valid, you can expect this high to stay open essentially, not to be rated, and it's a protected high essentially. And so from here, what I'm looking for now is, if we're displacing lower, are we trading from inefficiency or are we trading from liquidity? And so in this case, we don't really have too much to gauge price from. So when it comes down to inefficiencies, I look at what has price been respecting the most recently. And so if we pay attention to this volume imbalance right here, we can see that price has been trading inside of it. It's been supporting and then it rejected, and now it traded one more time into it, it rejected. And so going into today, which is Monday, April 15th, I was framing a bearish bias. And so as we drop down into the lower time frames, it'll make more sense. So keep in mind that this is the higher time frame inefficiency. So going down to the 1 hour chart now is where I'm going to be paying attention to another. So dropping down to the intermediate term time frame now, right? So we went from daily and now we're going to the 1 hour chart, and after that would be the 5-minute chart. So from the 1 hour chart now, when we trade into this daily inefficiency, I'm looking for a market maker model to form, right? So from this point on, I actually see there's an SMT divergence on this high into this higher time frame inefficiency. And here, once again, you can kind of see that here as well. Let me just annotate that here for you guys. So this high, it's the CPI high from April 10th. And so ES fails to trade above it, YM fails to trade above it, while NQ trades above it into that higher time frame inefficiency. And so from here, this is where I was looking for a potential reversal and some sort of downside. And so here we can already see that there is a market maker sell model. So let me just draw the curve, right? So now we're in the sell side of the curve up here, once we trade into this higher time frame inefficiency. So where would my phases be? It would be here. This one is the order consolidation, right? And this fair value gap right here is the accumulation phase of this market maker model. We trade higher, smart money reversal with SMT on the highs, right? And then now that we're going lower, I'm looking for a distribution phase. So initially going into Monday from Friday, I was bullish, but once we traded up here, we can draw our dealing range as well, right? So from this high to this low, draw our dealing range. We trade into an inefficiency in premium, right? And so this is a 1 hour inefficiency. We can look for some sort of lower time frame confirmation from here, which would be an SMT essentially. And in this case, as I dive lower, you'll see that there is another market maker model, and that's what I like to call an A+++ setup, is when you have a intermediate term time frame market maker model into a lower time frame market maker model. But just to keep things simple, this is the intermediate term time frame market maker model from a higher time frame key level. And so with this in mind, now I understand that once we trade into here, I'm looking for SMT on the lower time frame to tell me that there is some sort of institutional manipulation going on and that we can look for lower prices. On top of that, if you look over here with ES, you actually have an SMT here within the hourly fair value gap. So let me just annotate everything here for you guys. Here's your hourly fair value gap, and you have SMT on this high. Right, so that would be SMT with ES. And so now that we understand there's SMT on the market maker model on the intermediate term time frame, I understand that there has been manipulation of some sort in the market and it's ready to expand. It's telling me that the distribution phase is completed, it's ready to expand. And so this would be that silver bullet setup essentially from this hourly fair value gap. And so let's dissect this even further by looking for our lower time frame confirmation. So dropping down to the lower time frame, now this is where we can dissect our day into quarters, right? So we can put at 6 p.m. of Sunday, find our Asia session, and then our London session, and then our New York AM session, and ultimately that New York PM session. And so from here, you can already see that we can frame another market maker model, right? So you can see how we have, right? I'm just going to quickly highlight these because I am running out of time here. So we have origin consolidation, accumulation, smart money reversal up here because we have SMT, and then we have our distribution phase going lower. So that would be a market maker model within a market maker model, which is extremely high probability. And I'll take this setup any day. So a quick little trick that I want to show you guys how I like to determine whether Asia session or London session accumulated is I'll draw a measurement tool from the low to the high of the range essentially and see which one is larger range. So in this case, London session was 107 points range, right? And then what was London session? London session was 69.5 points range. And so in this case, I would be looking at London session to be that manipulation essentially. On top of that, we have news at 8:30 to manipulate price as expected. And we traded into a quote unquote higher time frame PD array, which would be the hourly fair value gap. And so from here, that's where I'm looking for another SMT. And this is a concept that I've been working on called stacked SMT. It's basically using time frame alignment with SMT divergence together. And it's proven very, very accurate. So definitely something I would urge you to backtest because SMT is a very big part of my trades usually. And so right here, this is where I incorporated my unicorn model. You'll find this on my YouTube once again. It's the model I found consistency with. And so right here, once we had SMT on these highs as well, so we had a 5-minute SMT. And on these highs, if you look on ES, right, NQ fails to take these lows here, and ES takes out that high. Same as YM, right? NQ fails to take out these highs, and then YM continues to trade above. So here's that SMT divergence on the highs right here, right? So once I had this SMT divergence, once again, that confirmed to me that the market was ready to expand. What really confirmed this for me was the market structure shift right here. And so this is where you'll find your ICT 2022 model, right? So right here, right, we took out London high, we created SMT divergence within a higher time frame PD array, or really that intermediate higher time frame PD array. And so from here, once we get that market structure shift, that's where the idea sparks. I'm just gonna do annotations the way ICT does it because I'm an ICT student. So here, light bulb means there's your idea, there's the spark, right? And so from here, I'm instantly paying attention to this breaker block. So this last down close candle is that breaker block. And once that occurred, I'm looking at this breaker block plus fair value gap equals your unicorn model. And so this became an extremely high probability trade for me. And on top of that, I added one step further is I went down another time frame alignment. So at this point, I'm going from daily to hourly to 5-minute, and then the next time frame alignment step down. Now you don't have to do this. You can just execute on the unicorn model. But what I did is I went onto the 15-second chart as that's a lower time frame relative to the 5-minute. So I dropped down to the 15-second chart from here now. Let me just find the unicorn model real quick. So now on the 15-second chart, this 5-minute unicorn is the quote unquote higher time frame of the 15-second. And so right here, what you'll find again is SMT divergence within this 5-minute unicorn. And so this is what confirmed it for me to take an entry. So we have SMT on the highs here. So let me just show you really quickly, right? So this high right here, be here, ES takes out that high, NQ takes out that high. But what does YM do? It fails to take out that high, right? So we had SMT divergence. And so what made me pull the trigger here was usually what I tell my students is I either enter on market structure shift, because at this point we're just dissecting price so deep that it doesn't really matter what we use anymore. So it's either market structure shift, bounce price range, or an inversion fair value gap that I'll look to enter on. So once we had this market structure shift right here, very tiny market structure shift, right? With SMT, make sure you have SMT if you're going to do this. Otherwise, just use the model the same way. If you're using the model the regular way, then you just execute on this unicorn model and just take a short, right? And target that original consolidation, which is down here, or you can even target that higher time frame or that intermediate term time frame market maker model, which your target would be all the way down here, which is still an insane trade. You would have caught how many points here? Today it plummeted over 400 points. You would have caught 260 points of it, right? So it's more than enough. It's definitely more than enough. So going back to the 15-second chart on this 15-second SMT divergence, once we had this inversion fair value gap right here, it also created a balanced price range. But right here, this was my entry signal. Once we closed below that, that's where I entered. Stop loss above this high. This SMT high should be protected. And so from this trade, I targeted the lows, right? And so I targeted the 5-minute market maker model low here, and it went straight to TP. So this was a very good trade that I took today. And once again, I'm just going to post the execution here just so then I can say that I actually did execute on it, obviously, because it's not, I am doing it in hindsight right now, but in live time, know that I executed on it. So yeah, with that being said, I hope you guys enjoyed this video, and definitely check out STBP or even check out my channel. If you want to watch Casper trade live every day, then join STBP. I highly recommend it because the community there is amazing. On top of that, I'll be reviewing your journals that you submit in there every single day, every single night. And additionally, I do have my own Discord as well. So if you want to watch me live stream every single day, then feel free to join. If not, it's completely optional. So I think that everything you need in terms of what I teach is already on my YouTube. There's tons of free education there. I think Casper's YouTube is more than enough. I think my YouTube is more than enough. It's everything you need. It's just having the hands-on experience and thought process of a mentor that you would basically take the leap, and that's really what you're paying for, right? At the end of the day, it's like when you're paying someone for education, you should be paying for them for their time and expertise. But other than that, if you can't afford it, once again, it's completely optional and you don't need it. It'll just require a little more work. At the end of the day, trading is going to require a lot of work. So yeah, it's just kind of investing into yourself, expediting your learning curve essentially. But on that note, thank you all for joining me here today. And thank you, Jesse, for having me. Yeah, have a great rest of your days.